Congresswoman Sara Jacobs, reminder, Trump's tariffs aren't a tax on foreign countries. They're a tax on you every time you check out. From Fortune.com. This ought to be fun. So Goldman Sachs estimates, as soon as I largen this up a little bit, Goldman Sachs, they estimate that U.S. consumers now shoulder 2/3 of President Trump's new tariff costs, with more companies planning to pass them on in the future and foreign exporters refusing to eat the price hikes. Look, just buy American. Just buy American. That's all you got to do. Then you don't have to deal with the whole tariffs thing. Now, the one question that I would have to pose to the American companies is, are you planning on slowly and subtly increasing your prices in order to take advantage of the other companies who are having to pay the tariffs and they're attempting to pass them on to the consumers? That's what I would be watching for, because during the supply chain shortage back in 2021, a lot of companies were doing that. And I've named Hershey's, and there's been other companies where they did that, where the goods that they were having to source to produce their materials or their products, they were in no shortage, but they were still increasing their prices anyway. And their reasonings were typically, well, because everybody else is doing it, so we're going to raise our prices too. That's a large reason why our grocery prices have increased so much. Not because we had supply chain shortages. We did at one time, and that's why they went up sharply in 2021. But they didn't back off of it. They just kept them high, even though the supply chain shortage had corrected itself in a relatively short period of time. But anyway, the bank expects the measures to lift core PCE inflation, personal consumption expenditures, to 3.2% by year end, adding pressure to the Fed's 2% target. I mean, look, it's all speculative, man. They don't have a crystal ball. They can't know the future. And we are going to have to wait and see. To be fair, they will probably attempt, some companies will, to push the additional tariff costs onto the consumer, but it has to be you, the consumer, who pushes back. And how you push back is you just don't buy it. Don't buy the product. Buy something else that's in a price point that's more favorable to you, or one that you're more agreeable to purchase. Whether if it's Downy, or if it's Tide, or if it's like Kellogg's or General Mills. I don't know. I know I'm naming off like American companies, but still. Look, if Nike, if they want to raise the price of their shoes up to $200 because they don't want to deal with their whiny tariff situation, despite the fact that Nike, it's common knowledge, they only pay like $4 for a pair of shoes to produce from start to finish, largely because of the child labor that they engage with, which I'm sure we don't do that anymore. We totally don't do that anymore. Well, at the end of the day, even if you're not having children that are assembling your shoes for you, you're still doing it in third world countries where you're paying people like 40 cents an hour or something like that. So just don't buy Nikes then. If they want to raise prices to the point where you find it to be unreasonable, just don't buy it. In fact, I mean, most Americans, they could stand to save some money anyway. Just buy less. Don't get a new pair of shoes every month. Wear the same pair of shoes for like 8 months. Believe me, you're not going to die. You won't die if you wear the same pair of shoes for a year. It ain't going to kill you. So anyway, let's see. When President Trump announced his tariff agenda, he said it would be foreign companies and consumers that would eat the price hikes. That's a take that may be proved optimistic and at best and misguided at worst, while tariffs have yet to significantly shift the dial on inflation, prompting individuals like Treasury Secretary Scott Bessent to label them the dog that didn't bark. Analysts are widely expecting the hikes to ultimately be paid for by the U.S. So far, the sharpest end of the tariff regime has yet to be felt. President Trump delayed his Liberation Day tariffs by 3 months in order to reach agreements with trading partners. Yeah, I mean, we know that. Yeah, we get it. The tariffs haven't really we haven't really seen the full force of or the consequences of the tariffs yet. And according to Trump and according to Trump's team and the Trump administration, it's going to be like minuscule. I don't even know if minuscule is the right word. It'll probably be a bit above minuscule, but like I said, at the end of the day, it's up to the American consumer. Do you want to pay for those or those product increases because they're blaming the tariffs, or don't you? If you don't give them your money, because bottom line, it's a supply and demand issue. If they end up with a shitload of supply and they've got nobody buying their products, guess what they're going to have to do? They're going to have to eat the tariffs. They're going to have to eat the costs. Oh, or they could just go out of business if they don't sell anything. That's usually what companies do. If they can't sell anything, they usually end up having to go out of business. All right, so where are we? Some negotiations have proved successful, with framework deals done with the UK, the EU, and Japan, to name a few, drastically lowering tariff rates from Trump's initial threats back in April. Yet countries that haven't yet agreed to a deal, which received letters informing them of their new tariff rate, saw their effective export rate rise on the deadline of August 7th. That includes nations like India, which is facing a rate of 25% that may double on August 27th as punishment for buying Russian oil. Likewise, while the Trump administration on many occasions has touted a deal nearly done with China, nothing beyond an agreement to delay tit-for-tat price increases until this week has been confirmed. Well, Trump already said he pushed it back another 90 days. I already read that the other day on this show, on his Truth Social post. He said that the tariffs with China, we're giving them another 90 days. We're still working out details. Probably because China is I'm assuming, our largest trading partner, at least with regard to importing goods from another country. I mean, China's got to be king as far as that's concerned with the products that we import from another country. So I could see how it might be convoluted. It might be complicated. Plus, it is a communist country that we decided to hand all of our corporations over to, which is beyond retarded in my opinion. I don't know why they didn't start with India, for example. I mean, hell, at least there's a sizable population in India who speak English. You think that we would have tried to push production over to India? Look, they shouldn't have even done this in the first place back in the 70s or the 80s when they started to offshore all of our companies. Shouldn't have even been done in the first place. But it is what it is. Anyway, I'm just saying, probably should have been India instead of China. Probably wouldn't have been dealing with so much bullshit. You don't want to do business with a communist country if you're a superpower like America and you've got the morals and values of freedom and liberty and all that, and then you're going to go off and do trillions of dollars worth of business with communism. Yeah, okay, all right, whatever. So, but the portion, where am I? Economist Elsie Peng wrote in a note yesterday, seen by Fortune, that Goldman believes exporters absorbed 14% of the cost of all tariffs in June, which will rise to 25% by October if the sanctions follow a similar trajectory to the price hikes administered by the Trump administration in his first term. Again, they don't have a crystal ball. They can't exactly know that. Look, they're forecasting it probably because maybe they're in communications with certain companies that are communicating that information to them, saying that, yeah, we do plan on jacking up prices because at the end of the day, our shareholders, we don't want to be the ones holding the tariff costs. Well, again, it has to be up to the consumer. Don't buy it. So, but the portion consumers can expect to pay is also on the rise. Peng noted that around 36% of the 2025 tariff costs were passed on to consumer prices after 3 months of implementation, and around 67% were passed on after 4 months. The Economist added that although the pass-through rate appears to be increasing rapidly over time, it still remains somewhat below the pass-through rate that we estimate at the same point in time during the 2018-19 trade war. One portion of the economy that intends to reduce its share in U.S. businesses. The Conference Board released its U.S. CEO confidence report for the third quarter last week, which revealed 64% are certain they would be passing the price hike on to consumers, and a further 16% said they're still considering. This is a higher rate than previously identified. It was only in June, the New York Fed reported 45% of service firms were intending to pass on the full extent of their tariff-related increases. Let's see. I'll just read this last paragraph here. Peng noted, Peng noted that her math implies that U.S. businesses have absorbed more than half of the tariff costs so far, but that their share would fall to less than 10%. This net impact on U.S. businesses likely masks that some companies have absorbed a larger share of tariff costs, while some domestic producers shielded from import competition have raised their own prices and benefited. And yeah, it goes on for not a whole lot longer, but it goes on for a few more minutes. But if you want to check out the article, it's down there in the description.